Hello traders, hello investors, how are you doing today my friends? Welcome to another video here in the Finance Hydra channel. My name is Nathan and in this video we are going to take a look at the market. We are going to analyze the indices, we are going to talk about some stocks. I really believe you guys are going to enjoy this video. I have some insights to you. In this case, remember to click on the like button to support me. If you are new around here, if this is your first time watching me, remember to subscribe because I do believe this video is gonna be helpful to you. Alright, so let's look at the price action. Let's look what the charts have to tell us right now. When we look at S&P, the S&P did a very nice bullish structure down here. I told you guys a few weeks ago, guys, buy when there's blood in the streets, okay? When it's dropping, when nobody has the guts to buy, you are going to buy, okay? So this is my recommendation to you. I always like to tell you guys, if you want to trade, especially if you are trading individual stocks, buy near support levels, okay? Avoid buying near top levels. I mean, it's not a good idea to buy S&P around 4,800s. Around 4,200s, it looks good. So always try to buy near support levels, and I will keep the S&P and the other stocks on track. But guys, the S&P is doing exactly what we described it could do, okay? It did a fantastic bullish reaction down here near support level, and it did trigger a bullish pivot point. Do you guys remember in our last video, both trends are made of higher highs, higher lows. Right now the S&P, it did a new high and it is doing a new low. As long as this low is not lower than this previous low, that's fine. The odds are that it's going to do another new high and it could hit our target at 46.52, I believe, right? Yes, our target is at 46.52, which is my personal target on the S&P. This is not a secret to no one. It is my target since we were down here. I do believe the S&P looks more bullish than bearish because it is already in a short-term bull trend. It is already doing higher highs, higher lows. Today it seems it just dropped to retest this support level, which was previously a top level. Remember guys, according to the polarity change in technical analysis, previous tops are going to work as future support levels, and this is exactly what the S&P is doing right now. It has another gap over here, right? We have another gap which I do believe it's gonna get filled in the next few days, even in the next few, no, in the next few days, right? I believe this gap is gonna be filled and probably the S&P will continue the bullish momentum as long as it doesn't reverse. Let's see, what could be reverse on the S&P? Let's say it goes up, and if it does a top lower than the previous top, alright, probably it's gonna drop. If it loses the previous support level, then okay, it reversed in the short term. That's frustrating. That happens, but it is frustrating. So let's wait for another bullish scenario. I rather prefer to trade the S&P on the buy side than on the bear side because the risk-reward ratio makes more sense and because the long-term trend is still bullish. Okay, it's not necessarily bearish. Maybe after the moment we lost this purple line, okay, we are more bearish than bullish, but right now it feels just a normal correction to me. The NASDAQ index is trying to do a very good reaction. Again, if we see, where is the path? If we see this going on, okay, probably the NASDAQ will go up just like the S&P. I do have a target at this gap. I believe this gap is going to be filled, so let's wait for more information. As far as I know, we are dropping to, let's see, let's use Fibonacci for a change, to the 50% retracement, and we are reacting nicely. So, okay, just a natural correction. That's just fine. This reaction is good. As long as we don't lose the previous support level, great. Now, let's take a look at what's really interesting. The elephant in the room. The elephants in the room, right? We have Facebook, we have Amazon going up 15% today. Wow, that's so crazy. It dropped almost 8% this day, and right now we are going up 15%. That's stupid. And we have Google. Let's start talking about Google. Google reported earnings, good earnings, Good surprise, everybody liked it, so Google exploded. However, guys, Google just hit the previous resistance level. It just hit the $3,000. What does that mean? It means that it is a sell sign. I mean, it hit your target, sell it. Okay, I still believe Google could fly or break my target level, sell half position. But if it hits your target, man, sell it. Sell at least partially, because this is going to bring to you at least some peace of mind. And if it drops, okay, it's gonna drop, but at least I sold the half position around my target. Right now, as far as I know, the trend is bullish, so maybe it's gonna give another opportunity to buy near the 21 EMA after it fills this gap, maybe, right? I don't know where this is gonna stop dropping, but maybe it's gonna be another opportunity to buy. In the 1 hour chart, we are just retesting the EMA in the 1 hour chart. So maybe if it does a bullish structure over here, a bullish pivot point, maybe it's gonna be a buy sign as well. But I always advise you guys this. If a stock hits your target, sell at least half of your position. When we analyze Amazon right now, is Amazon a buy? No, Amazon is not a buy. Not even unless if you're aiming for the long term, because Amazon was a very nice buy last week, and I did tell you guys this. My videos are all public. You may just watch my previous videos. Amazon did a bullish candlestick pattern last week. It was a very good one, and it broke last week's high. The moment it did that, man, you may safely buy if you want. I mean, that's not a problem. It's not crazy to buy stocks near support levels. It is in fact a very, very good idea. So, because the risk-reward ratio makes sense. Right now, for instance, last week, if you bought Amazon over here, look at your risk-reward ratio. It was very, very good. Even if you're aiming the previous top level over here, 2.6, very good risk-reward ratio. So I am more bullish than bearish on Amazon for now, but I do not believe it is a buy at this moment, as crazy as this sounds, because again, we as traders, we are driven, what is our main driver over here? It's risk-reward ratio. It's not even necessarily price action or technical analysis, because we use these tools to understand the market. But as traders and as investors, we have to take care of our risk management, of the size of our positions, and above everything else, risk-reward ratio. That's what is really, really important for a trader. Right now, we are going up sharply. I don't see Amazon as a buy at this moment, but okay, we are going up nicely. Maybe we're going to hit the previous resistance level around here, 3300s, and we have Facebook. Facebook right now, it's dropping sharply. It dropped 26% yesterday. Wow, that's quite crazy. If you look in the weekly chart, we have a massive candlestick pattern, massive one. As far as I know, only technically speaking, all right? I'm not gonna talk about Facebook's earnings, because everybody knows its earnings. Everybody knows it lost 500,000 active daily users, right? Okay, everybody knows that. The real problem on Facebook is that the market is still trying to price how Facebook is going to react to Apple's change on its privacy policy. So I do believe it's gonna struggle a little bit, just like Pinterest was struggling in the last few months. But right now, as far as I know, only looking at these charts, I think Facebook is doing an exhaustion bar. An exhaustion bar is a very strong candlestick pattern with high volume that just hit a previous support level. So again, just like on Amazon, if we see a bullish candlestick pattern next week, if next Friday we close this on bullish territory, I believe it's gonna be even a buy sign, because it could bounce back up to the 300s, and that's fine. It still could engage a bear trend for good for the next few months to retest, I don't know, $137 again. That's a real possibility. However, for now, I think this bar was so crazy, and there is a very decent chance that it is an exhaustion bar, because we are near support level. If it reacts, that's gonna be great. We have a reaction in the daily chart, but I do not believe that's enough. I rather prefer to see a crystal clear bullish structure in the 1 hour chart before calling it a buy again. But as someone who's out of Facebook, I would be very interested in buying it. It's not the time to sell it. I mean, the time to sell was when it was near almost at $400. That was a good sell. Right now, it's not, okay? We are near support levels. There is no way I'm going to recommend a sell over here. But anyway, for now, I am neutral, but I will keep my eyes on Facebook, on Amazon, Google, and on the indices as well. Are you still watching this video and you didn't click on the like button? Remember, my friends, click on the like button. I bet this video helped you. Thank you very much for your support, my friends. Stay safe. See you on our next video. Bye-bye.